Another popular tool that traders use is the trailing stop. A trailing stop is placed on an open position. It is set at a specified distance from the current price. The trailing stop distance is measured in points, not pips, for precise platform accuracy.
The main purpose of the trailing stop is to lock in potential profits.
If the market keeps moving in the profitable direction, the trailing stop moves with it. It always maintains the stop loss at the pre-selected distance from the current price. If the market stops moving in the profitable direction, the trailing stop keeps the stop loss fixed. If the market goes against the profitable direction, it may eventually reach the stop loss level set by the trailing stop. Once the price reaches this level, the position is closed. Trailing stops are executed on the platform directly from the chart or terminal window. Unlike stop loss and take profit, the trailing stop operates directly from the trading platform.
A trailing stop is activated only when the profit of the position reaches or exceeds the trailing stop level.
To disable a trailing stop, select the None parameter in the Order Control menu. To disable trailing stops from all positions, select the Delete All parameter from the menu of any order. A trailing stop follows profitable price movement, stays fixed during a reversal, and can close the position when the stop level is reached. Learn to trade consistently. Master the financial markets with Britt Online Trading Academy. Subscribe for more.
Forex and CFD trading involves substantial risk. It may not be suitable for every investor. Never trade with money you cannot afford to lose.
Please like and subscribe.